Welcome, dear traders. On a Monday, Wall Street saw a rather volatile session. However, stocks were able to recover just an hour before closing. Asian stock markets advanced today as well, and the main driver for Asian stocks is the upcoming Fed meeting. However, they also react to internal news. Watch our video review and find out more interesting details. And let's start. The US dollar is drifting higher in anticipation of an aggressive rate hike. It's rising steadily versus its main rivals, moving slightly below a 20-year high of 109.78. Since the start of the year, the US dollar index has added 14.7%. It's likely to log the biggest gains in 38 years. Its rally is largely fueled by expectations of key rate increases. However, it's also up as a safe haven asset, as traders are concerned about the slowdown of the US and the global economies. Given that speculators have already priced in a 75 basis point rate hike, the greenback is trading in the narrow range of 109.36 and 109.87 ahead of the meeting. Analysts believe that the rate increase will hardly impact the trajectory of the US dollar, and this is why investors should pay more attention to the comments of Fed policymakers. The US dollar is also climbing amid rising yields of US Treasuries. It appears market sentiment is now more sensitive to the Fed's meeting rather than events in Ukraine or the energy crunch in Europe. Traders are now pricing in a sharp rate increase. The two-year government bond yield, which is quite vulnerable to inflation expectations, reached a 15-year high. The 10-year government bond yield exceeded 3.5% for the first time since April 2011. Runaway inflation and the strong labor market have reinforced the expectations of a third straight 75 basis point rate hike. Speculators have already factored in such an increase. However, some investors do not rule out a 100 basis point rate hike. However, the likelihood of such a scenario has lowered significantly over the week. As a reminder, last Wednesday, after an increase in the consumer price index for August, a chance of an even more aggressive rate hike totaled 38%. According to the CME FEDSWATCH tool, today this probability has dropped to 16%. It suggests an 84% chance of a 0.75 basis point hike. This week, the Bank of England and the Swiss National Bank will also announce their key rate decisions. While these regulators are widely expected to raise their interest rates, China's central bank has chosen another path. At its meeting, it kept the benchmark rate unchanged to stimulate the slowing economy. The Bank of Japan also stands out with its ultra-low stance. The watchdog will announce its final rate decision on a Thursday after the meeting at September 21 and 22. Despite the repeated verbal interventions of the Bank of Japan, analysts do not expect any shifts in the current monetary policy parameters. As the rate gap is widening with the other central banks, especially the Fed, the yen is hovering near the critical level of 145. Its dynamic is rather alarming. Today, the dollar-yen pair has already risen to 143.67, and the weak yen has also pushed inflation to 3% in August 2022, after 2.6% in July. Currently, the main risk for forex is a prolonged rally of the US dollar. As for the yen, such a rally could lead to a collapse given the growing gap in the government bond yields of the two countries. Verbal interventions will not be enough to support the yen, and today jumped even despite the consolidation of the US dollar. In the Asian session, the dollar-yen pair was trading in the bullish channel of 142.91 and 143.75. A strong dollar is also pushing down commodity currencies. The Reserve Bank of Australia minutes published today confirmed that further steps on the monetary policy would depend on a fresh macro stats. In the minutes, traders also found statements that Reserve Bank of Australia Governor Philip Lowe had expressed earlier. He said that at some point the regulator may slow down the pace of a monetary tightening. If so, there could be a rate gap with the Fed. The Australian dollar keeps dropping amid these risks, hovering near the two-year low of 0.6707. The Aussie is unable to climb due to the risk aversion. As a commodity currency, it's losing ground because of falling oil prices. In the Asian session, it was trading in the downward channel, moving from the resistance level of 0.6696 to the support level of 0.6749. The New Zealand dollar showed a similar dynamic. The Kiwi failed to resume growth even despite the fact that the service sector in the country expanded at the fastest pace since April 2021 in August. Governor of the Reserve Bank of New Zealand, Adrian Orr, revealed on Monday that the regulator was working with more than 110 central banks around the world, and this remark also did not help the Kiwi rise. Today, the NZD USD pair tumbled sharply to 0.5912, moving in the bearish corridor of 0.5911 and 0.5977. There are the main highlights of the Asian session. Don't forget that there will be holidays in some countries this week. It could stir up market volatility. On a Monday, trading floors were closed in the UK and Japan. On a Thursday, there will be a day off in Australia. Japanese traders will leave the market on Friday. Subscribe to our channel and keep close tabs on the market developments, and see you soon.